if you had a choice between having more gains in less amount of time and having some gains in a greater amount of time, which one do you want, right?
We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pains.
That's going to be bonkers.
Okay, everybody, welcome to another episode of Talking Trades with myself, Kevin Wadsworth, and my friend and colleague, Patrick Karim. We've got a topic for you today that you might not have thought much about. We're calling it ROT, and don't let the rot set in. It's returns over time. It's a concept that is pretty important to get into your mind, to understand. So, Pat, perhaps you'd like to explain how we can analyze returns over time and how it can help us.
Yes, of course. Look, this is very hard for concept to understand. Like, yes, price is going up on a price chart, right? But is it going up equally? Is the efficiency of the up move the same as it was in other segments in that bull market? Because in a bull market, it's not all the same returns, right? So I'll show you guys. Trust me, when you see the charts, you'll start understanding this. You have price going up, and then you have time. But if you divide the price appreciation in percentage divided by the amount of time you were in that trade, then it dilutes your returns right over time. So that's the ROT, right? The returns over time. What is your ROT? And we're able with charts to identify high ROT periods, high ROT zones, whatever you want to call that period where you get the highest ROT in the bull market versus even the price keeps going up at the another segment of the bull market, you could be in the lower ROT zone. So yes, there are two good choices, right? The price is going up probably in both areas. But if you had a choice between having more gains in less amount of time and having some gains in a greater amount of time, which one do you want, right? So here you're getting a sneak peek at our website there. We have a knowledge base, and here's the returns over time article. Maybe I'll do a demonstration with Nvidia, and then I'll show you how this applies to gold and the miners and how you could leverage this. So essentially what you have here is when the distance, here's the monthly chart up here. Here's a distance from the 36-month moving average, the distance from that red line. When the price is coiled in tight around the moving averages and starts to explode upwards, those are the low risk areas. Those are where the high ROT, the high returns over time zones appear or more likely to appear. And you have one right here. So here's for Nvidia. In that whole segment, once the price started expanding away from the 36-month moving average, you had 783% move in 28 months. So that gives you 27, almost 28% per month return, that's the high ROT, right? Whatever that amount is, that's the high ROT period. After that, once the momentum broke down, so once there's more momentum that broke down, but this is a longer term rising trend line that broke down here. If I put my dashed line here, whatever happens after that, until the price does a full reset and you get back to the next higher ROT possible starting zone, this is the low ROT period. So even the price went up here, and often people say, well, Patrick, you exited, the price kept going up, or you FOMO in. This is when the price, people they're hearing about their neighbors that made a ton of money in Nvidia. They made 700%, 800%, and you want to get in. A lot of the people will get in here, but look at the returns. Yes, 100%, it went up 41. And that's if you sold at the peak, right? I'm giving full benefit. Let's say you were able to get in here and sell at the peak. You made 41%, but over 10 months, 300 days. So that gives you a ROT of 4%. So per month, those returns, 4%, which is, like I said, guys, I preface this, which is fine, but you're not getting the same returns as you did before. So if I've offered you the choice, do you want the greater returns in the shortest amount of times or some returns in the more time or some time, which one do you want, right? So you'd rather ride that one. And also what happens after low ROT areas is you could have a more important drawdown, right? Because the price slowing down and having a hard time accelerating like it used to is also a sign of weakness. So that could turn into a more pronounced drawdown and even more time going sideways, right? So here's the first example. It did it again here. This time after the high returns over time of 21% that it did here, once it broke down the momentum, it never even did. Sometimes there's no new highs. Sometimes you don't even have a new lower rot zone. So think about that. So sometimes it just dies there and then huge drawdown. And here, that's where we are today. We just completed another high rot zone, which we actually completed back in September when we lost that rising support line on the momentum. We lost it back in September. And guess what happened? The price kept going up. Now it's up 36% over 12 months instead of doing 525% in 20 months. And we still it's having a hard time going up, right? It doesn't mean it can't go up, but often until you get a full reset, the odds are that it outperforms, gets a higher rot after momentum breakdown. The odds of that happening are much lower. It needs a full reset here. It needs that reset there, the purge. So that's why I'm not impressed by Nvidia. Yes, it didn't fall apart in price like it did in the previous cycle. It's doing a little bit like the first cycle, but understanding where you are in these higher rot versus lower rot zones, it's critical. So I'll show you guys how this applies to the miners where we are today. Here, the gold and silver miners, ASA guys, always use ASA. You have data going back to the late 70s or late 60s. It's the same as the JDX, Huey, pretty much tracks the same. I did the same exercise I did for Nvidia. So you see the high rot are often found at the beginning right here, breaking out above that 3-year moving average, exploding upwards, like that. High rot, 130% in 27 months. Guess what it did after it lost rising support line? It did a full reset here, but it had a hard time going back up. It did in 38 months, it did only 49%. Then it had another lower rot zone. It did 28% in 14 months. And then after that, it did the lowest rot zone, 18% in 29 months. So the greatest returns were here. Sometimes when you have a full reset and it's able to break out again properly after the price goes back down, you get a better rot, but not always. So where we are today for the miners, guys? Well, we're in a high rot zone, 100%. We are in the high rot zone. The high rot zone started back in late 2023, early 2024, when you started breaking out above the 3-year moving average, when gold was breaking out. We've done so far 136% in 19 months. I think it's even less than that if I would time that up. So we're in the high rod zone and we're still in it. We're still in it until we lose rising support on the distance from moving average indicator. So it's fine. There's no low risk entry. We're completing the initial high rot, the best performance of the miners, right? We're in it right now, guys. Just like it did back here, 2019, late 2019, it broke out. It did a high rod zone. And it required a full reset to activate a new high rod zone. So that we're in it, guys, right now. That's great for the miners. And what does it look like for gold? Look in the past. Look in the 2000s rally. Distance from moving average going up. That number is low, but that's for gold, guys. This is still at 2.9% per month for gold is huge, right? That is huge. It did 220% in 76 months, but for gold, that was a great run. After that, look, it did a full reset here, a full reset. Guess what that means? That means the next run up has a potential of being a high rod zone, and it did that. It did 3.45% per month of rod. So it did 83% in 24 months. That was another high rod zone until it lost momentum. And then after that, you need a full reset, right? And sometimes it takes time for the next opportunity to happen. And here we had one down here in the June of 2019. We had a breakout after this low risk zone here. The momentum broke out. Guess what happened in this high rod zone? We got 2.5% per month for gold. Again, it's like in the norms, gold, it's like its returns per month there. It varies 2.9, 3.4, 2.5, and to 2.5%, 46% in 18 months. So instead of always being impressed by somebody saying, oh, it did 100%. Yeah, but be smart. Say, and how much time did you do 100%, right? And see how it compares that same instrument, how it did previously. And look where we are today. We're at 3.47% per month, Kevin. It's like we're in the hot zone here. So that's gold right now completing it's still in its high rod zone. As soon as it loses that rising support line, for me, I'm going to call it the end of the high rod zone. And then we see if it gets a full reset. If it gets a full reset, then we have another chance at another high rod zone. If it doesn't fully reset, we might have, like I showed you on that Nvidia chart, we might just have price still going up, but a lower rod zone, guys. And just, you have the choice, guys. Just choose a high rod zone, the high returns over time zones. You know when they're starting, they have a higher chance of starting. Just play those, and you'll have a better sleeping nights where the price goes up faster in the least amount of time.
That's fantastic stuff, Pat. Returns over time. Pay attention, everybody, because that is another tool in your toolbox for maximizing your gains in the minimum amount of time. Okay, if you enjoyed that, don't forget to hit the like, subscribe, and notification bell. See you all again for plenty more of this.